We're going to turn our attention now to national oil companies. I think yesterday we heard from one of the speakers that NOC E&P spending has overtaken international oil company E&P spending. So the NOCs have become much more of a force within the E&P market than they have ever been before. And the observation would also be, perhaps in some cases, a misunderstood force. Some of the strategies, some of the tactics, some of the approaches that NOCs take to their international expansion journey is sometimes not as well understood as the IOC journeys. In fact, the history of NOCs is fairly recent from the attention that they've been getting in the marketplace. I recall even as far back as 2004, 2003, there was very little talk in conferences about national oil companies. Yes, there were the resource holders. Yes, IOCs were going into their markets to develop oil and gas, but the wishes and wants and the attributes and the strategies and the objectives of NOCs were very little discussed. I think it was probably the CIRA conference back in 2005 that was the first catalyst where people really started thinking, wow, these NOCs are coming out of home territory, they're going to be expanding rapidly, they're becoming more demanding, it's not as easy as it was in the past for IOCs to operate in their territory. We need to start understanding NOCs better than we've ever done in the past. And since then, we've seen a concerted effort to try to do that with some mixed results. So let's focus on NOCs, particularly in their international expansion journey, and say a few words about the attributes and some successes and failures as well. So the first part of the story, and of course you all know this, in recent years NOCs have significantly increased production levels through overseas acquisitions. When we look at where investment has been taking place, we identify places like Australian LNG, US shale plays obviously, Canadian oil sands, deep water in places like Brazil. The focus has been very much the Americas, if you look carefully at where the investments have been made, and very much driven by the Asian companies as well. The two biggest deals, however, one was very much CNOOC Nexen, America's driven. The other one was Rosneft TNK. What's very interesting is how different these deals are compared to the BP Amoco, the Chevron Texaco, the ExxonMobil stories, and the integration challenges. Integration is widely different in the Rosneft TNK example versus the CNOOC Nexen example. What that's trying to tell you is that NOC deals are fairly unique in nature, and you don't really have much of a template to follow. And sometimes people refer to the NOC world as the analog world with its own peculiarities, and the IOC world is a digital world where there's a template, there's a plan that you can follow time and time again. In the Rosneft TNK case, integration, the task is huge, but you don't have the challenges of culture, resistance to change, different ways of managing the entities as you will have with CNOOC and Nexen. In fact, we will be seeing in future that cultural attributes will play a bigger and bigger role in terms of the creation of clusters, axes of trading, and axes of investment globally, as we become more and more fragmented in some way, a little bit of the reversal of the globalization that we've been having in recent years. So we turn our attention to NOCs with international ambitions and their drivers and paths that they follow. And as I said earlier, each one has to find its own way. There aren't that many templates for them to follow. Why expand internationally? That's pretty obvious. Securing demand, i.e. partner with demand centers. It's quite striking, in fact, how much of the NOCs are concerned about demand erosion and maintaining strong relationships with their demand centers. And of course, the other side of the equation is securing supply. So the energy security story that we're all very familiar with. And then technology comes into play, and this is where, when you listen to IOC presentations, technology is always the main theme. Innovation is always a very strong theme, and yes, indeed, IOCs dominate that space. But we're seeing more and more oilfield service companies as well coming into their own in the technology domain. But anyway, international expansion is also, of course, to get access to technology, whether it's deep water or shale gas, and potentially apply that back home. And the last topic, portfolio diversification, is less of a driver. How do they achieve this? Well, we mentioned the strategy, we mentioned the corporate strategy, but first and foremost, it's a national and political strategy that is driving these internationalization moves, by and large. Even in the case of a Petrobras that is, publicly listed company, you will find some very strong national drivers there in terms of its journey, and I will address that in just a moment. In terms of the market entry structure, well, we have deals such as the ADAX deal, such as the Nexen deal, and then we have partnerships such as the Chinese with Repsol or with Galp, focused on the pre-salt in Brazil. At the end of the day, the objective is to plant as many seeds as possible, as you'll see, be active in as many countries as possible, understand the divergence of needs of oil and gas countries, and then create axes of collaboration, create positions of strength from which to grow and evolve. Not that different from what the IOCs have done. And there's an interesting aside here, which is the evolution of the trading axis versus the investment axis. The trading axis could be, for example, Turkey and Kurdistan, very much aligned to the investment axis and the needs and wants of the two countries. But we are seeing, in the case of China, a slight divergence between the moves of the trading axis versus what's happening in the investment axis. So what we're saying is, watch this space for continuation in terms of movement in trading axes and what that will mean in terms of the investment that you'll see NOCs make and the territories in which they will invest. So very often, let's turn our attention to the flagship and sort of the number one quoted example of an NOC, and Helge Lund mentioned it himself yesterday, that's made the move into becoming an international NOC. This is the often quoted example. It's both good and bad. It's good because of the amazing things that Statoil has achieved, but it's bad because, in essence, Statoil's journey is a digital journey. Statoil's starting point is very different to the starting point of a Sinopec or even a Petrobras, for that matter. It has some very interesting replicable components, such as learning, becoming an operator, international expansion. So indeed, the NOCs can learn from Statoil's journey, but the NOCs need to find their own way, and the NOCs have far greater challenges at home in terms of meeting government needs, and in fact the balance that was mentioned yesterday between energy, water and food. These are all considerations very key to Asian companies, which of course the Norwegians didn't have to take into consideration during their international journey. So a great journey, but not necessarily the most applicable today. It's a digital template rather than an analog template. I think the real analog template is when we look to Asia. The modus operandi of Asian oil and gas companies, national oil companies, seem pretty clear, but I think the East-West understanding and the intricate understanding of how Asian companies, especially Chinese companies, operate and intend to grow in international markets is very little understood. And I think there's a lot more effort that needs to go into A, alignment, and B, understanding of why and how we can be better partners between East-West, between the resource seekers and resource holders when it comes to to China in particular. We understand the drivers, the demand holder drivers, see them listed on the left-hand side. We understand the resource seeker drivers, and we know why these companies go towards an internationalization strategy. But by and large, you hear criticism, particularly from IOCs, in terms of the way China has gone to market, or some of the other national oil companies have gone to market. So I think there's a need for an agenda of more dialogue and better understanding as to why this has happened and how it's likely to play out, and the partnerships that can evolve from it. With very different DNA, we find the Russian national oil companies quite different approach, contrasts and policy changes being very prevalent. Gazprom, for example, is the world's largest gas producer and yet has a very small share of global LNG. Gazprom is positioned within a very stagnant growth axis that was mentioned earlier, which is Europe. So in the case of Russia, some of the objectives would be access to demand, as you see listed on the left-hand side, especially Asia, and increased output. Rosneft, in fact, would typify the new Russia, or the new dynamic with new policies, with its new IOC partnerships breaking ground in places like the Arctic Exploration Initiative that they've embarked upon with one of the super majors. So that's the Russia story. Try to speed up a little bit here. In terms of Latin America, I think it's been very strongly dominated by Brazil and by Petrobras particularly. It's gone full circle, so started out with the Brazilians striving to produce 500,000 barrels a day in the 80s, and then realizing that they needed more than that, and going internationally, building capability, adopting a lot of the management techniques of IOCs, starting to become a pseudo-IOC. And then with the discovery of pre-salt, doing a U-turn essentially, and divesting, raising capital, and reinvesting in domestic resource development. So it's very much a politically driven story and a technology driven story, because Petrobras has indeed achieved amazing things from the technology standpoint in deep water, as we all know, but a reflection of changing priorities. If we look elsewhere in the region, we find that the short-term ambitions are primarily national, and the NOCs are primarily focused on their national markets rather than going internationally, as we described with the Asian NOCs or with the Russian NOCs in future, potentially. Argentina, for example, with the Vaca Muerta, very much focused on its own shale gas prospects, and of course the famous story with the Repsol situation over there in Argentina. So very much focused on its home markets rather than going international. And so we come to the real game changer, if you will. And it's been mentioned many, many times at this conference. But in fact, it's not just the US shale gas or shale oil. In fact, when we look at the north-south axis, we find a formidable stacking up of reserves and prospects from north to south. We also find a very diverse number of players: national oil companies, international oil companies, majors, independents, farmers, people who have a bit of land where the shale gas gets exploited. If we go north to south, we have significant Arctic oil gas prospects, Canadian oil sands, 175 billion barrels, Canadian tight gas, shale oil, 800 billion barrels perhaps, shale gas, Mexican oil and gas, Andean oil and gas with Colombia, Ecuador, Peru and Bolivia, then deepwater Gulf of Mexico, Venezuelan heavy oil. I won't go through the whole list, but I think what you can see very, very clearly is that a formidable energy axis and trading axis has developed north-south in the Americas, and you also can see that most of the national oil companies within this space are very much constrained to home territory, and are very much dominated by the demand centers in North and South America. So a very interesting recent change in global oil and gas, which is having its repercussions in terms of the relationship with Middle East, Asia, and Russia. Funding for international expansion plans. I think my colleague is going to be mentioning this in a little bit more detail later on, so I won't go very into any depth here. I think the important aspect would be that the thing you see at the bottom, greater reporting and transparency requirements. Essentially what we see there is that the internationalizing NOCs will be brought into the digital world, or the IOC world, through the finance door rather than through the technology door, which is how the IOCs have expanded their activities. What I mean by that, expansion of these NOCs is very much led by funding, whether it's government funding, and now transitioning into other modes of funding, which will require greater reporting and transparency requirements, which will also require a change in some of the ways that these NOCs communicate with the outside world. In terms of the operational and managerial challenges, again, interest of time, I won't belabor all the points there. I think fundamentally the ones that we see often creating issues are, number one, cultural misalignment, where we have two companies with a very diverse set of values, understandings, beliefs, trying to work together. That can be very challenging. At the other end of the spectrum is a divergence of strategy, so the NOC drivers versus the joint venture partners, or versus the company that's been acquired. And then in the middle of that is the other area that we see creating some problems, which is inadequate planning and integration. You have the company that's been acquired having its own methods and approaches to planning and integration, and the company acquiring having a different view as to how planning and integration can be approached. End result being poor performance. So you have a lot of the companies that have been acquired suffering from a serious lack of performance and needing some serious assistance in terms of turning their operations around. But there'll be more on that later. So the companies need to recognize the challenges of internationalization and the attributes of successful internationalization. We talk a lot about maintaining trust, earning, building, maintaining trust. That was mentioned yesterday many times. And indeed, that does play a central role, and it does help and create the ability to build successful partnerships. But we're still worlds apart. NOCs and IOCs still need to go a long way to be able to collaborate and cooperate effectively. On top of that, I think NOCs are starting to understand a little bit better that they need to be more selective in terms of identifying which markets they wish to play in, and their market entry strategy, and the returns that they wish to get from market entry. If you do an analysis on some of the acquisitions that NOCs have made, you will see perhaps potentially that they've paid over market price for those acquisitions, and if you further continue to analyze, you'll see that synergies and savings lag behind expectations when the deal was closed. So lots of room for improvement. And I think NOCs, to gain some respect, need to deliver consistently against targets, and they need to improve the ability with which they manage multiple stakeholders. We've seen some recent examples of governments rejecting and cancelling licenses from NOCs, again as a result of some poor stakeholder engagement and stakeholder management. So the last slide, we're reasonably well on time, good. We just want to say we're in a dynamic environment, obviously. And I think this era we're in now is really a transitional one. I think the transition is coming about for geopolitical reasons, but it's also very much coming about as a result of what's happening in the United States with shale gas and shale oil. So we see the emergence of new and fundamental important geopolitical and economic constellations aligned around culture, values, national security, energy security. The US becoming closer to the European Union, for example, as you've heard in Ireland just recently. China and its role in the emerging markets. The Middle East getting closer to Asia. Turkey and Kurdistan, the example I used earlier. So a wide variety of different constellations, if you will, a combination of culture, values, alignment of interest. I think you could say Brazil, Angola, Portugal would be one of a previous example around the deep water. Ignoring these trends could lead to isolation. So several governments and NOCs start to worry that as their understanding and as their relationships with the demand centers decrease or demand decreases, that they could be left out in the cold. In fact, you might say, the crosswinds of political change can in fact create a lot of casualties along the way in the coming years. So international engagement is not optional, it's an imperative. I think the winners will know how to create codependency within their natural trading and cultural clusters, and they will know and learn how to leverage technology for the greater good of the areas in which they decide to operate internationally. Thanks very much.